Yeah, let's map out ISPs like for the whole thing though. Let's be excessive here, right? Like from up here to down here. Let's map out all the ISPs here on the daily. Hold on. ISP, and you said ISP. All right, let's continue. Let's do the obvious ones, okay? Nothing too internal. Okay, sweeps, right? Across the board. This is a sweep, right? We can just look at this immediately and see that none of these actually break this high, okay? So now we have, Bauman mentioned that we have a higher one here. This breaks down, sure. A higher one here. This breaks down, a higher one here. And of course, this breaks down, right? And we have one here on like a lower time frame, of course, but nothing too clear. Okay, this is just the daily, right? Let's go to the 4 hour. Yeah.
Yeah, that little guy there.
And this gives a swing point, right? This is just the daily, right? So the daily range overall was still this range here, right? There was no body closures above, so we're holding to, you know, this range to go lower, right? On the 4 hour, let's see what happens here. Okay. Okay, so let's study the ISPs again here. We got a sweep here, and then from here, just continue, guys. I know we did a homework on this before, but like right at the beginning of the program, but.
Like a failed, I guess.
Yeah, now we're going back up. Type 1, just mapping out the most obvious ones. We have obviously one here. And we have one over here. This gives us a swing point. Immediately look how these ISPs are failing, right? This is example 1. These ISPs are failing, whereas this swing point is holding. I mean, nothing's perfect, right? But it's holding. Right, we start to push away from it. So already giving us context here with the swing point, whereas the ISPs aren't doing the best job, right? Like ISPs are failing all over. Obviously this one doesn't count so much, right? But this is like a false signal for an ISP, SMB, false signal for an SMB, but we have a clear swing point. When we come into that and we start to shift away, we have a clear buy side target and a clear protected level, right? Now we can just keep doing this here. ISP here, we have a lower one. This becomes a swing point. When we trade above this region, right? No break, pushes away. We have, again, a clear level that's protected to trade away from, right? Like here. ISP. I'm probably missing some because I'm a little rushing a little bit, but just down, type 1, breaks down, SMB. SMB, what does that give us here? Once we get this, we look to the left. This is an ISP as well. I'm sure there's more ISPs all over here. This is a swing point. You get a swing point. We can start to trade away from it because we expect when there's swing points forming that we're going to get multiple higher ISPs, right? Or lower. Like in this case, we're expecting higher ones, right? Trading up, trades up into liquidity. Of course, you probably aren't going to target this area because swing, but we'll target maybe up in here at a minimum, something up in here. So we look at the liquidity that's internal, like up in here, and we could potentially trade to that, right? Comes up to here, pushes down, another swing point, right? We have a lower ISP, right? And you trade away from it. And we can use swing points in ranges to give us more context when ISPs aren't really doing the best. And you'll see this all over. So go ahead and study ranges and make sense of it using swing points rather than just ISPs. I mean, swing points are ISPs, of course, but
right,
they're long-term, right? They're giving us long-term narrative. Now, swing points are less important not they're used a little in different context when we're talking about large ranges, right? When we're looking at swing points, what we're basically doing, like let's think about a range, right? So we got here type 1, type 2 pushes down. There's the higher high, breaks down, comes up. Maybe you get a type 1, starts to break down. Okay, so you get a someone BRB back. Okay. We got a swing point here, right? So this is a trending market condition, right? Got a swing point here. Let's imagine that we have here. This is like a type 1, breaks down, of course, right? Breaks back up. Of course, we're already bullish anyways, but just the only reason this is necessary to map so we know where the next swing point is. Right, type 1, type 2, type 1 pushes up, breaks down, right? You got a type 1 again, and we start to trend down. So we have a lower one on the left, lower one on the right, and this becomes a swing point. So this becomes a swing point. When does this become a swing point, right? We have a breakdown, but when does this become a swing point?
When this one gets split in?
Yeah, right? When we get a lower ISP to the right. So what's the significance of a swing point in a trending market, do you think?
In a trending market, I would say that's where we look to trade away from
Yeah,
in some cases and look to target in other cases. For example, since this is a bullish market, once we get down into wherever, let's just say it's below this point, then we would look to target this swing point here, if that
exactly.
makes sense.
This is right. This is 100% right. But I'm looking for a little more of a specific answer. What significance, okay, besides targeting, does it, what information can we gather from it about market condition
Like a reversal.
or phases of the market? Yeah,
A
like a
reversal,
reversal,
yeah.
right? So
It's type 1 usually.
what it signals to us, right, in a trending market is this would be, when this is formed, we're confirming the start of basically like a impulse phase going up. And then when this is confirmed, we're now confirming the start of a pullback phase, right? When the top one is marked in, right? Because now we've had an SMB down, we're expecting lower ISPs. And then when we have another one, right? Swing point here, higher one here, lower one here. I mean, higher one here. Now, Chris, of course, we can look at it as targets, and you can look at it as, this one is an area to potentially trade away from. But as soon as we get this one confirmed, we're now confirming that we're in we're back into the impulsive phase or the phase 3, right? What's that?
Move higher. Gotcha.
Yeah.
The reversal to move higher.
Yeah, exactly, right? So by tracking these, we understand the phases that we're in the higher time frame or long-term legs, right? Whereas the ISPs are used to trade the development of the legs, as they happen, right? So we can use the swing points for 2 reasons, okay? Or 3 reasons, actually. So the first reason, obviously, is your targets, right? Like you said, and potential areas to trade away from. The second reason is just like we just stated, which is confirming the ends and beginnings of different phases of order flow or expectational order flow, right? And then the third reason is basically being able to predict, how ISPs will develop. So I think you already mentioned, right? Like maybe we pull back down here into liquidity, and then from this region, even though that we are forming bearish ISPs, we understand where swing structure is situated, and we understand that, swinging for the fences is not smart, and we are still counter to swing structure. So even though ISPs are bearish, we can sit back and we can wait for ISPs to turn bullish, right? And we're expecting a new swing point to form, and we can start trading ISPs like this, and then the subsequent ISPs on the way up to our swing target, right? That's in a trending environment. Whereas in a range bound environment, we can use it as basically our main protected level, because we understand that in ranging environments, basically the market's just like liquidating both sides, right? Like this happens all the time, right? Because it's the market's constantly going through a phase of like accumulation, reaccumulations, distributions, redistributions, basically the accumulation of orders either to go sell or to go buys or sells, right? So this could be like, let's imagine that there was a big bearish push here that is coming from. This could be a reaccumulation of orders to then bring price lower, you know, and profit, right? So that's essentially what a range is, right? So by tracking here ISPs and swing points, we can see that there's an ISP here. Let's just call this an ISP. It's type 2. You know, you got a type 1 here. We get a brick structure, right? And then you get this, and this gives you an SMB, right? So we're expecting some kind of a pullback phase. We get one. So you get one here. And then here, and then let's just imagine that there was another ISP here. Then we broke down, we look at what caused it. You get an SMB and a lower ISP. Now you have a swing point, right? And by tracking these swing points, we're able to start, you know, we have a clear protected level when our ISPs, you know, kind of stop working, right? Like this didn't bring us all the way down to liquidity, right? Creates an ISP here. We break up, all right? We get an SMB here. This becomes a swing point. All right, now we have a clear range, right? From here to here on our swing structure, right? And we can trade between this region, and we can start to look for trades that are in this region to go long or below this region to go short. And we understand that our bias overall is still to take out this low because we've had a swing point up here, right? So this is the swing point low, this is the swing point high, and we're expecting price to go lower, even though it chops in this range. And because we're between two potential swing points and we're in a range, you can start to look to like trade up, but most importantly is to anchor to, you know, the bias, which is to come lower and trade short, despite all of these SMBs, right? SMB up, SMB down, SMB up, SMB down, right? Constantly switching your bias. When you're having that, when you notice that your ISP system isn't working because we're not in a trending market, you use the swing structures as your anchors instead of ISPs.
That would have helped a lot on GU.
100%. Very, very, very important. The whole ISP system is about one thing, right? Our whole trading system is about one thing. It's about basically gamifying trading, right? Our job is not to buy or sell. I mean it is, but our job is not to think about, you know, what's the next candlestick going to do. Really, it's all simplified down to where do I think the next green dot is going to form, and put an order there. That's what I want to do, right? That's our whole trading plan in the most simplest sense. Where's the next green dot going to form, and how can I put an order there? Okay.
Mm-hmm.
We can use swing points now in a ranging market to predict where the next green dot is going to form that we can place an order in, or where's the next blue dot going to form where we can place an order in a ranging market. That'll come in handy. Because we understand that we can have a slew of bullish ones here and still be bearish. And then we understand that it's necessary to have failed ISPs to create a swing point, right? It's absolutely necessary to have failed ISPs. It's part of the system. So what we could do is when we see failed ISPs, right? So let's say we've failed ISPs, SMBs, I mean the same thing when I say that right now. But let's say we have a breakup and we're having subsequent bullish ISPs, right? We've failed and we've taken an ISP here. This doesn't immediately mean we're bullish, right? Because we understand the development of swing points, and we can understand that this breakup is necessary to form a swing point in line with the, you know, the swing narrative, right? So we can start to look at this as, instead of looking at this as reason to go higher, we can then look at this as reason to potentially put in a swing point. Is this a swing point? We could potentially look for a what? If we are looking at this bearish swing structure, we're expecting to go lower, price is broken up with an ISP. What are we looking for here? The question is this a swing point in development? So what do we look for here?
We would need the SMB and then a new type 1, type 2 here.
Exactly. You look for the SMB, you look for the type 2 to potentially forward, type 2, type 1, and you trade away, right? We're the question to ask is this a swing point? The second question to ask is, if it is, where is that next ISP going to form that's lower, which is basically confirming this bias here, right? So a little bit of a mouthful there, but that's what goes through my head when I'm trading the or tracking ISPs. Any questions?
No,
No.
So there's layers to it, but yeah, that's why it's you have to think a little bit differently in a ranging market versus a trending market. Yeah, that's it. Fuck, this is running. This is a no-brain trade right here, man. 4-hour range, sweeps, breaks up, pushes down in a way. We can see this, like maybe we can track this on a 15 and we can also build narrative using swing points, right? So let's actually track this out here. You guys want to mark out some ISPs here from this point? Okay, and in here as well. And here, everywhere. Let's follow it. This one we don't quite have one, but this is like an unconfirmed one. Yeah, it's really here to here. We don't actually have one above here. Okay. So what I was going to look for here was if this is a swing point. Because this one doesn't break anything, this is not an ISP, right? Okay, and that's it. So this is all potentially can be taken out into here, right? So this is all the development of a swing leg. But what I was gonna see was if this was a swing point, then we can assume that this would be broken and start to trade away from it, right? But not so clear here. Let's see if there's another one. Maybe that's a little clearer, right? Like in this region, just using the 15-minute. So I know for a fact that this is a swing point. And let's start to track away. Pushes down. I mean, it doesn't clearly break, but it is what it is. Okay, now we've had a breakdown. We've started to close below or push below ISPs, right? Our swing structure high, of course, is here now, because we've had the SMB back down. Here's that point. And now we're expecting that ISPs start to fail in the development of a new swing point. So without even looking at it, because I understand that we've pushed away from this point, I understand that this is the next swing point, of course, right? So if we follow ISPs, it looks a little something like this, right? Whereas if we follow swing structure, it's just looking like this, right? So the ISP is the development of your swing legs, right? Your swing leg narrative, right? It is that sub order flow inside, right? And then if we just continue, pushes down, doesn't really close, but even though that this is failing, we understand that this is our swing point. So despite failed ISPs, we can still look at this as a protected level and trade from it. So you see that this is not impulsive price action, it's very corrective price action, and ISPs are failing. They're not consecutively, giving us many trades, right? It's not trending up until we get it like into here or on a higher time frame. They're trending like on the H1, we can see it's very clear. But here on the 15-minute, not so clear because we're in a very corrective market. So in a corrective market, what we do is we want to basically be trading from the extremes, trading from closer to our swing points and placing our stops below, right? Because we know that swing points are all type 1s. They're all sweeping. And they're very strong, right? Especially, as long as they're in line with your bias, right? Your direction. So we can start to look for potential trades, right? Like this, take the high, and these ones you can also hold for quite some time because they're coming from swing points. And we expect that swing points will be forming consecutively higher highs, and we can continue this process, right? So let's keep mapping, and you're going to see that the ISPs are not going to work as long as we're in this sort of choppy price action. Breaks up, this becomes a swing point, right? Pushes down, this region still, oh, my back hurts. Let me take off my hat. This region still holds.
Gio, I have a question here, actually.
Yeah.
Because this one should be a swing also, not so? Well, based
Yeah, you're
on
correct.
the rules. Okay.
Now remember, when we're bullish, we're really looking at the lower ISPs, right? We're looking at reason to be bullish.
Right.
But we can,
Okay.
yeah, this is still swing points, right? Lower swing points, right? So this is
So
all
is this a
this.
super swing point now that we have a swing to the
This
left
is
and
a
a swing
super
to
swing
the right?
point. So yeah, lower one on each side. Label that one pink. So what this is signaling to us is what? If we're going to lower swing point here, but a higher one here, what is this signaling? We have this. What is the signaling? It's signaling one thing. We haven't talked about this, but just using logic here. It's no one's gonna have the answer, but it's signaling market contraction, right? So you're just and you can see that here as we go pull in like this, right? It's just signaling market contraction. Generally, what that means is that a big move's coming. Okay. Now we never talked about this, but I'm just using my logic right now. Why would swing points be contracting? Lower ones are obviously holding. So this is where our bias is, and the bias is to go higher. But if we're seeing lower ones, then this is, the market contracting and getting ready for a big move, right? And we can just apply this again and again and again. Here we have a swing point here because we have an ISP here. Here we have an ISP here, pushes down. We have a higher one here. So this also becomes a swing point. And notice that these swing points are consecutively getting higher, right? And I know for a fact that this is a swing point, right? And then that's not really an ISP because is it? Yeah, I guess it is. It is the cause for, no, it's not. This isn't the cause for this break. So we're not going to call that one an ISP because it doesn't really break any structure, like on a lower time frame for sure, but on this time frame currently, no. Then we have ISP here, right? ISP here, ISP here. This is all holding, respecting. So ISP here. And that's the last one. Break, ISP. Now we understand that. Now look, now we're in a trending environment, right? It's a little bit different. But this is our swing range. We have an SMB, so we can expect bearish ISPs, but we're not going to swing for the fences because the map out the swing structure, right? Let's start mapping out the swing structure, like the highs, right? ISP structure. And I do this all the time, mind you. I actually just follow price like this. And I map it out like with like the drawing tool, because it helps me to actually understand what price is doing, right? And then we would see the swing structure points. Just connect the dots, right?
Yeah, you can change the the chart on the line chart, so you can like see the structure.
Oh, perfect. Yeah, I could do that too. Oops. Right? You can see all the noise that's coming from ISPs, right? Versus the very simple swing in a more corrective environment. Now, pay attention to what's happened here when we actually start, like we had this contraction and we entered more of a trending market. And it's very clear here because we're actually getting multiple consecutive higher ISPs. When we get an SMB, what is that signal? Guys, what is that signal? We've had an
Now we're-
SMB.
Pull back to a type 1.
Pullback.
Pullback. We have phase one, which is the initial leg. SMB, that's basically initiating phase two, right? Where are we going to pull back, guys?
one.
The obvious thing is we're not going to come below here. So we're going to look to take liquidity into what, guys? Yash just said it, type one,
Yeah, type 1.
right? We've taken all the liquidity available into the only type one. And then from this point, we've broken up and we're like, okay, is this a swing point? Let's put a little question mark there. Is this a swing point? What would we look for? If we suspect that this is a possible swing point, we're gonna look for the higher ISP. So we can immediately take a trade here, or what we could do is we can have it give us a break. So this is a confirmed swing point. And in trending markets, we understand swing points are the start of multiple bullish ISPs. And then we can trade from this region here, which is a much safer one because now we have a confirmed swing point and we understand that market direction, like Chris said, would be to use this as a potential target, right? And
Yes.
this is why our system is fucking amazing in trending markets, right? So difference to recap. In corrective market, we're really going to use these as areas to trade from because ISP system doesn't work so good, right? You're going to get fake false signals left and right. So anchor your bias to the swing points. If we see in a bullish market, lower swing points on each side, we're going to start to look at that instead of looking at that as a reversal, which is considered, that is possible, but we're going to look at that as market contraction. And then you're going to expect market protraction, which would be like your expansion phase, right? Which would come after the fact, right? So you're expecting larger moves when you see this, okay? You don't need to know that information too much, but regardless, the more information you know never hurts, right? Different phase of the market. From here, now in a more trending market, recap, if we have a swing point, we have an SMB, we're using that to keep track of our phases in the market. Pullback phase. When does pullback phase start? On a long-term scale, right? Right, you're going to use this fractally, of course. On a pullback phase, that ends when we get another swing point, right? Now we're in a trending phase, like a pro-trend phase, right? So pro-trend phase, the initial phase, when we get a top swing point, we are now trading counter trend. When we get a new bottom swing point, we are now back in the pro-trend phase, right?
Mm-hmm.
That's it. And let's see here, we have, this is not one, right? So we're still in the phase of currently swing point from here to here. This is all in one time frame, guys, right?
Yeah.
Yeah.
Of course, you can use this on a multi-time frame and build a super strong biases. But yeah, right here, oh, we have this. Oh, what does that give us? Swing point, right?
Swing point, yeah. Higher one.
I mean, this is a little questionable though for me because this doesn't actually break structure. So what I would want to see rather is a pullback, because look, if we look at this, right? This breaks, what breaks structure here? It's the candle here. It's this candle and then this candle breaks the structure, right? And then there's a pullback, but this pullback doesn't actually do anything. It just prints a bullish candle and this is sub. So on a lower time frame, sure, but it's a little questionable, right? So when I'm unsure, I'm still going to stick to, what's safest, and what's safest is to call this an ISP and not look at it as such a protected level. I mean, it is a type 1, so we could probably trade away from it, but the possibility of all this being liquidated and us still being long is very real, right? So I would say that this is overall the swing leg, right? So if we do get an SMB back down, which we've had here, now we're going to wait for another ISP with a pullback to then make this a swing point, right? And then we can start trading long again, right? But currently, as it stands, we have all this room to potentially pull back to. So yeah, that's it. And that is how you trade your ISPs to build some pretty solid narratives.
Question, Gio.
What's up?
This is a little bit not irrelevant, but a slightly different topic, but related. On the weekly, we just came into a type 1.
Talking about UCAT?
So, yes. So where we are right now on the weekly, we're like in a type 1. So would we wait for example, a 15-minute swing point to break before looking to potentially go lower?
So let's recap this. What are we talking about here on the weekly?
The swing point. So I'm looking. No, sorry. What am I saying? The type 1. We came into a type 1. Sorry, which would be here.
Okay, so you're thinking about potentially seeing what happens to go short.
Yes. What would be the criteria to go short here using swing points, I guess would be the question. Because on the 15-minute, we would need for a swing point to break to confirm that we would then be looking to go lower? Or am I just confusing everything right now?
No, you're not. That's a good question. So what's going to happen? I can tell you what would happen in this scenario, right? Now, what to look for and what to happen may be two different things. But what would happen is the lower time frames will start to shift first, right? Naturally. The first thing you're going to get is a 1 minute. Then you're going to get like a 5 minute, then a 15-minute, right? And then an hourly, and then a 4 hour, right before the daily shifts and the weekly shifts. Like the lower time frames are going to shift first. Now, because it's a weekly time frame, generally the rule that I follow is this.
Gotcha.
So I should do this. Hold up. What is it for the arrow? 26. Okay.
This is actually what we kind of discussed on our call the other day.
Yeah. So the weekly, so monthly is roughly confirmed by, if you guys don't know how to do this, hold Alt on PC and click 26 on your number pad. You'll pull up an arrow. Okay. So monthly is confirmed by weekly, which is confirmed by daily, which is confirmed by MTF basically. So we'll call that, H4, H1. Which is confirmed by LTF, which is like H1 to M15, right? You know how markets are, and when we don't, or we aren't too strict with time frames, which is confirmed by, LT entry, we'll call it entry, quote unquote, because for lack of a better term, which is again M15 to M1 basically, right? So this is how it works. The monthly is basically confirmed by the weekly, which is confirmed by the daily, which is confirmed by the MTF, by the LTF, by your ultra LTF, right? You might be able to skip one, right? Like I might be able to look at the daily to give you an early signal that the monthly is holding, but right now we have a weekly, right? At the very, very, very least, if you want to be the most aggressive that you can to get involved, look for a 4 hour. Look for the 4 hour to shift. Look for the 4 hour to shift and start to form potentially a swing point, because we're talking on a weekly. If you expect that this is going to hold, we're looking to take out this, right? So give it some time, because if you don't, you're just going to be fighting order flow. If we get a 15-minute shift, okay, what does that mean? On the 4 hour, that may mean nothing. That may only bring us down to here to go up more, right? So at least because it's a higher time frame one, weekly, at least look for the MTF to start to shift, right? Not the LTF, because then you're just going to get smoke trying to fight MTF order flow. And if you really want to be safe, wait for the daily to start to shift.
Okay,
No,
cool. Thank
yeah.
you.
No problemo. Right. And immediately what I see here on the weekly, or on the sorry, yeah, on the weekly on here on UCAD is yeah, type 1 here and this is still our range, right? This is still our range here. So
Yep. We've taken a fuck ton of sell side liquidity.
yeah, taking sell side, broken down fractally, of course, from here to here. So on the daily, right? So remember, this is the weekly's here. We're going to use the daily to confirm it, right? So let's go to the daily. The daily here, we had an SMB, right? And that started to signal the beginning of a pullback phase. Now we've had multiple SMBs right here, and we can go here and we can map everything out. And you'll find here, just like before, we'll get lower swing points and lower swing points, but we have a higher one here. What does that start to signal? Market contraction, right? So we're getting ready for market protraction or market expansion in either direction. We don't really know, but based on our anchoring of our weekly ISP here, we're leaning towards buys, right? We're leaning towards buys. So how do we know that this pullback phase is done? Well, we look for that daily
SMB.
marker, which would be this daily SMB, right? Now that we have a daily SMB, we can start to look for longs, okay? Now this may give us a reaction, absolutely, but for us to really be short biased, we're gonna have to look for daily SMB back down, or at the very least a 4-hour, right? If you're looking for 50-minute, you're just gonna get smoked, most likely. So being conservative.
Got it.
Right? No problem. And you know what? Let's actually look at this region here again with you know, following the ISPs, right? So if we understand here that this is our weekly ISP, I'm just going to label these with something else. We're going to use these here for the weekly here. We got weekly ISP here to here, right? Okay, now I'm going to drop into the daily. We're going to map out the daily structure. Okay, so this, I know that's weekly ISP, but this is also a 4-hour. All right, later, Brian. Safe drives. Okay, so I automatically here know that this is these are swing points on the daily. Of course, this is a swing points here because we have a higher ISP to the left. This actually breaks structure. And then obviously somewhere in here, there's a higher ISP to the right. So let's map out ISPs here on the daily, yeah? From all the way here to where we currently are. Bob, and your drawings are all fucked. Okay, there we go. Now they're good. This doesn't break, but I mean, we can still call it an ISP, right? It's old price action. It doesn't really matter. We don't want to be so anal about it. This is for narrative building. Okay, so what does that give us here? A swing point and a swing point.
Yeah.
Swing point. So the swing point is still from here to here. This is internal structure now, right? So we have here and here. This is all internal structure. Okay. So we still haven't broken this high, but these are still internal structure. And you could see that these areas in the ranging market are holding very strong, right? And this is, of course, a very large scale price action, 203 days, right? So we could have started to anchor to these swing points and had fantastic swing trades. And I think I took one in here as well. I held actually for days earlier in the year. I think it was like a 3 or 4 day long trade. And yeah, just following this in this ranging price action. Then when we break down, we still know that our swing point really, this is all internal, and our swing points here and here, and also that our weekly ISP is here and here. So we start to look for basically, you know, where could we start to go long from again? So let's just follow this along. There's one also here.
Swing.
Swing, right? Lower swing. Oh, this is also the swing. Is
Yeah,
it? Yeah, we
so
swing. Boom, boom, boom. Because we get a higher swing. So now we can start to look, we're in a trending internal market. Interesting.
oh no, this is not a nice day that failed. So this will be here.
What about this?
I mean, that's internally of like on a 4-hour medium time frame. Yeah, it
Yeah.
is. And then after that we have this. A lot of sub here. Yeah, that one, this one. We broke, then this took some liquidity. That's it.
Okay, so let's look at this now and think about, what can we learn from this, studying this price action, okay? How can we use this? Like, how can we find this useful? How can this help us? So if we go to the weekly here, weekly, we know we're trading from here to here. And on the daily currently, we don't have to be waiting for price to come all the way down into here and liquidate everything before looking for a trade, right? So on the daily here, we're now mapping everything, and let's start to look at the SMBs. So here we have an SMB. This marks the beginning of a pullback phase of this overall leg. On the weekly, we push down, we get another SMB, right? So this has given us a signal that we're in phase 3, the continuation phase. Of course, that didn't end up being the case, but we can start to look for longs. We look for longs, we look for longs, we break down. Okay, we start to look for shorts again because we've had put in a swing point right at this point. We start to look for shorts, but we understand here that this is a swing point and our overall bias is bullish. So we're going to favor longs from here, right? And again, we put in a new high in here, swing point still here, SMB, lower ISPs. As we come to this region, we're immediately looking to the left here, understanding our bullish bias, right? And favoring longs again from this region, okay? Pushes out, SMB, we're re-engaged, comes back, looking for longs, fails, pushes down. We come into this region immediately here. Again, we are potentially looking for longs, right? This is without considering liquidity, right? Without considering liquidity, without considering that this whole type 1 range is, or weekly range here is unmitigated, right? But just completely mechanically, we're looking at this as a swing point. We'd look to trade from here. Now, I didn't look to trade from here because I figured, no, this is a little more discretionary, but based on the fact that we're failing to like push up higher, that this should be weak, we're relative equals. So, but even if we did want to trade from this area, we'd look for a higher ISP before trading. We don't get that, so no trade. Maybe on a 4-hour, let's see. On a 4-hour, do we get one? No, there's no displacement. So you don't even get a trade idea. But had this displaced up, we'd maybe look for a trade and been wrong, but that's okay to be wrong once when we were right following this rule 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times, right? Just trading pro. And then when we break down, we're not immediately looking to just, because we've broken out of this range, to come down lower. We're still anchoring to our bias, which is the actual range that we're trading in. Understand this is all internal. And we're looking for that next formation of a swing point. We get the swing point, and then immediately you see, as soon as we get that swing point, we're starting to trend, and we're going to assume that we're going to trend up into, take out these contracted, swing points, right? Now that we come into this region, it's a swing. Although we assume that it's not protected, we're going to look for a breakdown before we even think about taking shorts, right? So we're still just going to favor longs until we get a breakdown on a higher time frame before we even think at all about taking shorts. And then when we do get a breakdown, what are we going to do? Are we going to assume that this is going to get taken? Yes or no? 1 for yes or
No.
Y for yes in the chat, N for no in the chat. Is this weak? Y or N?
No,
No, it's not weak. Why isn't it weak though? If we have a higher swing here like this, right? Why isn't it weak?
Because we
Because we're
understand.
favoring
Understand.
the actual range that we're in, knowing that this is all sub, understanding that this is the potential swing point to take us up higher. So with that in mind, with that bias in mind, then if we do get a breakdown here, what are we looking for?
I move back to a
Take
type one
sub.
and
Take sub into what?
then type one. Yeah.
Type
Type
one.
1.
A type 1. Beautiful. Looking down in here, do we see a clear type 1 here? Let's go back to the daily.
So that might be the only one.
We have a type 1 down here. Basically, we're looking to see what's going to
What the
happen when we
fuck?
come down here and liquidate everything. Okay, and that's it. I mean, we can also look potentially to see if we don't hit that, what can we look for then? We're going to look for a back, like a base to form liquidity, the formation of a new type 1 to form a new higher swing point to take us higher. And that's it. Those are the only two things that we can look for. Either come back to the range or form a new type 1 to trade away from. And that's it.
Yeah.
And this is how we start to fractally build bias using this whole system. And fuck, look at all that shit that goes on through our head. Right? But notice, despite all of this going on through your head, which may be very jumbled currently, the whole bias is anchored to this. Right?
Mhm.
Definitely.
And this is how we're able to think like in so many different ways, 10 different things at once, fractally, because we're tracking ISPs. Right? We're able to think ahead. Okay, if this holds, if this starts to break down, what's the cause? Are we going to swing for here? No. Okay, what are we going to look for? We're going to trade into this region, wait for a break back up. Okay, there's a break up. Where are we going to go? We're going to come up into here, right? We're not going to look
Yep.
to short here. So we already thought 1 step,
Mhm.
2 step, 3 steps ahead. Okay, if this doesn't hold, then what are we going to do? We're going to just continue to trade it long. So we've already thought of like 5 different scenarios to trade from, right?
Yeah.
And that's literally
Yeah.
bias building. If this, then that. If this happens, how do I react? If this happens, how do I react? Right? And what is currently happening is how I'm going to continue to react, how I'm going to continue to trade until something new comes up and changes my bias. But I've already thought about all the variables, all of the potential scenarios. So when it does happen, I'm not surprised and I can continue to trade.
Hmm.
Mhm. Now, one last question, Gio.
Yeah.
Would be obviously it would be on the lower time frame, but based on daily, how would we know when is opportune time to get in? I know once we put in or know that we have put in this swing point, but we would have to wait for this ISP to break this one, correct? Before we know, okay, now it's time for us to, now we're starting a new swing leg, if that makes sense.
Yeah. If you need it confirmed, yeah. If you want it to be confirmed,
Okay.
yes. But
Mhm.
there's caveat there, right? The little hack. So we understand this. We understand that we've had a breakdown. We've had this
Mhm.
push down, push up, and we're in an area now. We've liquidated absolutely everything, right? We've come into this final ISP. We're in an area here where we can think that there's a pretty big possibility. It's basically a do or die situation, right? That if our bias
Okay.
is correct, that we should basically form a higher ISP here, right? So you can look to get it on the sweep aggressively. So how do we do that? Well, we look for an area with a sweep. And then we're going to look on a lower time frame to see if we can confirm it and then trade away from it, right? Maybe you would try to get in here, trades, trading away from this region, assuming that this is a swing point, trades from here, assuming that this is a swing point, right? You don't have to confirm it to be able to assume it, okay? And that goes back to our whole talk here in trending, in like trending markets, right? We
Mhm.
understand that we need a breakdown of SMBs to form a potential swing point. So when we've come into an area where we've taken liquidity, where we're in the ideal area for a swing point to form, and we get like an SMB, or even if we don't, we get a buildup of liquidity, right? There's no liquidity below this leg, then we can start to look at it, right? This needs to be a type 1, of course, to be a swing point, right? Type 1. We start to push away. We look for that liquidation into it, and then lower time frame order flow to shift, to take buys, to take out highs, right? And if we look at that thing in the PDF section of the Discord, this drawing here, and I pulled this up in the past. It's super blurry, but whatever. If I pull this up, you can see that here, right? So
Yes.
notice here we have an order flow shift on the lower time frame, right? This is zoomed in on a lower time frame. So this is the daily here. So if I go to the 4 hour, I'm going to delete that here. We're going to put that image back. Okay. Here on the 4 hour, we have an order flow shift. You have an order flow shift here. You have an order flow shift somewhere in here, up here, right? Boop, 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 boop. Order flow shift giving us early indications. We're looking for that FEG. We get that FEG. We can look to trade this FEG early on to get involved, right? And then you can see here, which would be like this swing point. We can look to get into this. We need to see a buildup of liquidity, of course, right? Here we initially don't. Then we do have a buildup of liquidity, basically in here. Okay, this is not the perfect example, but you can see, you know, prices, they're unique every time, right? But we have like a type 1 in here. That holds, forms a new type 1, trades away. We can look to start to form a bullish bias in here because we believe that this is a potential swing point even before we've broken the high, right? So here, if we just study this on the diagram here, swing point, right? We start to take out, we have an SMB here, we start trending down, there's liquidity here, we take out that last point of liquidity, right? And then we push away, we displace away on a lower time frame. We build up liquidity. Because there's no other job to do in this region, we've done it. There should be no reason that price comes below here. So we can start to look at this as question mark, is this a swing point? We have a liquidity buildup. Why would we have a liquidity buildup before this point? Well, we can trade away from it, understand that this is possibly a swing point, right? You're placing your bets. And we can see that on live chart here. Pushes down, gives us a type 1. Delete all these drawings, okay. Pushes down, sweeps liquidity, gives us type 1, order flow shift. This whole region is activated essentially as a type 1, right? Type 1 range. You see liquidity build up into it. Of course, this doesn't come so deep, but it still sweeps some liquidity, right? We can look to try and get in on this, basically understand that this is protected, right? And just cover this stop, right? Or look to confirm it fractally, right? So here you have a beautiful trade, just like this. This is you betting that this is a swing point based on location, okay? Nothing else to come down here. We've started to displace away. This could potentially be a swing point, right? Now we could have held this possibly even up to here, right? Or we can wait for the confirmation of bullish ISPs and then just start to get in regions like this, right? So it depends on, you know, first of all, how advanced you are and how good you are at reading the charts beforehand. And how comfortable you are with that extra risk, right? You get the best trades from these regions, but you know, they're a little more advanced. You have to place your bets basically on, you know, betting that this is a swing point, treating it the same way as betting on an ISP, really, right? That's it. Something to look at. Go back to your charts and study, you know, study the shit out of swing points and how they develop and, you know, how you can trade them. Dude, do it. Seriously, guys, like go into charts and study the shit out of it. Write about it. You know, make videos about it for yourself. Nobody even needs to, you don't even have to post them in the Discord if you don't want to. I suggest you do because it keeps the motivation high for everybody if everybody sees each other working. But, you know, if you're not comfortable with that, whatever. And if you have questions, post a video. Send me a timestamp. Let me jump into that video. I don't care if it's an hour long. Obviously, I'm not going to watch the hour-long video, but if you have a section of it you want me to watch, post the video, give me a timestamp. I'll give you advice, right? But seriously, study the shit out of this because the whole system comes from the structure system. And you guys have a basic understanding of it, but you need to start to look at the thought process revolved around it, not just the dots, but the thought process and the thinking in steps, thinking steps ahead, the whole how we can use it to forecast, right? Like understanding that we've taken all this liquidity. we're in the prime area for the development of a swing point. What can I look for moving forward if I'm assuming that this is a swing point to take trade, even before the SMB? Because I understand that we're in the area and I'm expecting an SMB from this area. There's nothing else to do over here, right? That's how you have to think. Very fractally and in like 10 steps ahead. And it's tough, but if you do it enough times, it becomes natural. That's it. I think that's the session today, boys and girls,
Hell yeah.
Eesh.
ladies and gents.
Thank you,
What a
sir.
session.
What'd you
Yeah,
say,
that was fucking good.
Yeah, that was a nice educational one. All right, I'm gonna give you guys some fucking homework for this type of stuff, but
All
I'll
right.
figure out something to give you. But I think what we should do here is, first off, I have 2 pieces. Okay, the first one is study this price action, because this price action in here, notice you have draw on liquidity down here.
Hmm.
Here, draw on liquidity. You have like next draw, basically somewhere up here, right? But we see this is pure beautiful CO, especially on the 1 hour. You're going to see rule 1, rule 2, rule 3, all being respected in here. So beautifully. So just start studying this price action, the 4 hour, 1 hour. I think on the 1 hour, it was the best, especially up in this region. And you know what? You can choose a pair with the different price actions, right? One that's in a very trending PA, map out structure, understand swing points and ISPs and how they work, and more of a corrective one, and understand, you know, how we can use the swing points and all that to build good case studies to take trades from, like using that like prediction process. And there's a video that I put out on in the core concept course that's called like the prediction process, I think it's called, which talks a little bit about this more on a base level, but you know, this is more of advanced stuff that we talked about today. But try and understand this process and hone it in, and like, do it for 20 minutes a day, you know, do it for 20 minutes a day. You don't got to sit there for 3 hours and do it, but do it for 20 minutes a day. So it gets into the habit. Treat it like a drill, right? Like an NBA player goes and he's still dribbling, you know, he still practices his dribble, even though he's an NBA all-star. You know what I mean? You have to do the rudimentary stuff. Like a drummer does his rudimentary drills, even though he's a pro. Like you have to do that too as a trader, because it's like as much a sport as it is anything else. So you got to practice your rudimentary drills, right? And this is the most basic stuff, but it can also be some of the most advanced stuff. This is what's going to make you a really good trader. And that's it
All right.
for the session.
Thank you for the session.
Thank you. Have a good day.